Good morning, traders. Thank you for joining us for our pre-market prep from GameEdge. This is Michael coming to you from GameEdge on Wednesday, July 16th, with our pre-market prep session. As always, here at GameEdge, we'll cover our three pillars: sentiment, structure, and trend. We always start off with our market trend model. Currently looking at that, it's based on the tick index. Again, the bolded white CT is our intraday instantaneous cumulative tick. Obviously, we're discussing pre-market yesterday that we did see it recover the previous day back above the short-term moving averages, but very quickly in the morning we started slicing through those short-term moving averages. We saw the filtered cumulative tick, which is our larger institutional sell orders or buy orders, so plus 1,000, minus 1,000 block orders, start going to the downside below the zero line. And then we saw our cumulative tick obviously rapidly declining, so indicating that more selling was occurring versus buying, even though our new highs versus new lows, new highs were actually continuing to make outpace new lows, but our overall selling indicating that the market was changing to a position of a little bit of weakness, and selling was coming in overall. So we obviously were looking for 6,300 in the morning. That was that large hurdle or area that we're watching to see if price got over. We basically opened to that level and then continued to the downside, and we saw the selling pick up into the afternoon, and weakness coming in to the overall center, or to the overall structure. So we'll go over our volume, intraday volume analysis also. That kept us on the right side of the market yesterday, as we saw price depreciation as well as overall selling within the market. Moving on to our ARCX, this is our other cumulative tick trend model that we watch. Obviously, this gives us our indications for our mechanical portfolio. As long as the bolded white CT is staying above the colored ribbon, then our mechanical portfolio is turned on and we enter positions. We closed just above that level by a whisker yesterday. You can see the numbers here, really very close. So if we see any more weakness today, our mechanical portfolio will actually turn off, obviously indicating weakness coming into the overall market. Historically, what we've seen on this cumulative tick and this overall colored ribbon is we'll come up to the colored ribbon, we'll either test it or cut through it and then recover if we're going to continue the uptrend back to the upside, or we'll actually start slicing through this colored ribbon and we'll actually exit to the downside, indicating more selling and more weakness will be coming into the overall market. So we'll watch this. As of now, it's been a long-term uptrend for multiple weeks. So we've been riding that to the upside. Excellent trades in our mechanical portfolio. We're actually closing AMD this morning for 12 or 13%, depending on what AMD does this morning. So excellent trade there. Again, 70% win rate via our P2P portfolio. So make sure you check that out. We've posted on X multiple times with quarterly as well as yearly updates, extensive education on that. It really continues to continues to beat the pants off the SPX and SPY buy and hold. So make sure you check that out. So moving on, SPXA. This is our cruise ship. We're still call dominated, obviously heading into OPEX this week. Again, these are the larger contracts, as well as these contracts don't turn over as rapidly as the SPX piece. We like to separate that to give us a 40,000 foot view. We do see a few cracks in the ice if you compare this to yesterday pre-market prep. This chart, you can go back and pause your player and put these side by side, but we are seeing some more reds being exposed on the net deltas. It's just indicating that the out of the money call speculation may be dropping, or the in the money calls may be taking profits below spot price, but not a sizable change at the moment. But just some notes to look at as we come into OPEX and then post OPEX, where that money gets repositioned. So we'll continue to watch this. Again, if we start seeing more reds being exposed and show up, then we'd lean towards a further weakening within the overall sentiment structure. But as of now, call dominated with a few spatters of red net delta coming in, just a few cracks in the ice or a few warning shots to be aware of as we head into the rest of this week, as well as Q3. SPXP, we have turned to put dominated on the all full expiries, rapid change in the overall structure. So you can go back and pause your player from yesterday and compare these charts, but a significant change in the money calls below us. Either that was a closing or the out of the money put speculation overrode the in the money calls. Obviously, we still have out of the money call speculation to the upside via the net delta here, that is green. But if this starts changing rapidly to red, that would indicate the out of the money call speculation is dropping fairly rapidly, and in the money puts are being exposed, which weighs heavily on the overall structure and sentiment. So we'll continue to watch this 6,200, really that downside level. I think we tested 6,217 overnight via the SPX. So again, 6,200 large round Livermore round number level, as well as a significant number in the options complex. So we'll watch that to the downside. 62.25, 62.30 on the all expiries. That's another level we want to stay above. And then obviously to be a little bit more bullish, we need to get it back above transition, where we'd enter a little bit more call dominated positive gamma state, which would help us price appreciate up towards 6,300. So we'll continue to watch this. But again, deterioration in the overall sentiment and structure, whether this is a one-day kind of flash in the pan profit taking, or this morphs into something a little bit more bearish, we'll continue to watch day over day and compare those sentiment and structure changes. Moving on to the GEX ratio, we've really been harping on this divergence we've been noticing with SPXP appreciating or consolidating to the upside, and the GEX ratio dropping. Now we saw a new low on the GEX ratio. Obviously, this is spot price sensitive, but we're talking about this resolving either one of two ways. It would be that the GEX ratio or the spot price would continue to drop, and we would start losing some of those in money calls below us and capturing some of those out of the money puts. And this would obviously change the ratio when we continue to see this drop. And then obviously the short dated call gamma leaving the overall complex would continue to drop this. So now we've reached that almost balance point of 1. We're actually 0.96, so just under it. So we'll give the edge still to the bulls, as we're right on that 1, even though we're just barely under it. But if we continue to see this drop, that would indicate out of the money put speculation is overriding the call speculation, and that would be a weakening state via the GEX ratio. Just remember, this GEX ratio is a put call ratio, but we add a gamma component, which is a time component, so that gives us a better visibility of what is occurring on a short dated structure within the overall SPX. Moving on, the delta balance for the SPXP, as if you follow this for any amount of time, as you would expect, the delta balance dropped very rapidly. This is separating the two areas above and below spot price via the green line, which is the out of the money call speculation. The red line is the in the money calls below spot price, and obviously see these dropping rapidly, and the delta balance dropping to a -1. So that's a quick change, as we've seen before past in July, but then we saw a rapid recovery. So again, we'll be watching to see if that's the same thing that's going to occur. You see just a 2-day drop in overall price, and we saw a quick change in the overall structure, but then a rapid recovery. So that's what you want to see if you're a bull. If you're a bear, then you would look for this to stay pegged down at -1, which we're not seeing projected on out in time. We're actually seeing this recover into Friday, which is OPEX, but then a little bit more weakness after OPEX. So we'll continue to watch that. We discussed last week and into the beginning of the week that we were looking for some possible weakness heading into Wednesday. The structure was indicating that. And then that come to fruition yesterday pretty rapidly. And then obviously we'll see what Wednesday brings. But it was basically a phenomenon in Tuesday into Wednesday that we saw the possible weakness. And then that come to fruition, as I said, yesterday. So we'll see if we get a rapid recovery back to the upside, indicating short-dated call gamma speculation going back in, or if this continues to morph into something a little bit more bearish and we see the overall planes live below 0 and the delta balance pegged at -1, that would indicate that put speculators and bears are in control of the overall SPX options complex. Moving on, the SPXP 0 DTE transitions very well defined today, very narrow, 5 points there, 62.60, 62.65. So we'd have to at least get above that if we're looking for 62.85 or 6,300. You can see the net delta is pretty negative as we are put dominated up and down the overall complex. Net GEX is -22,000, so lean obviously to the put dominated, and total OI on a Wednesday is usually a little bit higher, so 300,000. So two things can occur today. We can get back above transition. Some of these out of the money, in the money puts start monetizing, and we start pushing that to kind of fear component of these put holders, and we see a closure of those, and we see some out of the money call speculation come in via our intraday vol M command, and that would give us an opportunity for an upside trade towards 62.85 and then 6,300, or we come up and test the underside of transition. We still have a significant amount of in the money puts overhead. Again, these will continue to be a headwind if we're under those levels. And the transition level, 62.50, 55, very large levels there, and 62.45 and 62.40 really is the index level. So if we're below all those levels, then we anticipate some more weakness and a move down towards 6,200. Obviously, we'd be looking at the intraday volume analysis, see if those put centroids are targeting or speculating downside, as well as the call centroid also, which we'll go over here in just a few minutes, our volume command from yesterday and kind of what it was telling us. So again, a couple trades for today. We'll be watching Drunken Sailor range there. We would actually lower it down to 62.40. I drew this box just a little high, so that would be the Drunken Sailor range, so choppiness there. If we come up and test or lose the bottom of the Drunken Sailor range, as well as the 62.40 level, we'd be looking for a short to the downside towards that 6,200 level. So we'll continue to watch this. I think pre-market we were at 62.57, so we were right under that transition area. So we'll look for a failure there at the open or a take back of the transition level heading into the open. SPX net stack command, these are high sensitivity levels. I think I've already discussed the 62.40. We have in the money puts above us, in the money calls below us, just not a significant amount at the moment from these left-hand plane, right-hand plane integrals. So we'll watch this. You see the out of the money puts charm. As long as we're above that, that will be supportive. That's why I talked about that 6,200 level. And then the out of the money calls, again, will be a headwind. That's all the way up at 63.10. So that's a significant strike above us. And then you see the net gamma at 62.85 as well as 62.40. That's why I talked about if we lose that 62.40 to the downside, this obviously gamma will kick in. Out of the money puts will increase that speed and sensitivity and most likely drive towards that 6,200 level. So we'll continue to watch that via the debt stack command. All right, volume command from yesterday. We'll watch this. This is what we produce end of day for our members. This basically just shows, get you orientated. The green is the call centroid, the red is the put centroid. And obviously if these are sloping to the downside, this green, obviously out of the money call speculation is not occurring. And if the red is continuing to the downside, out of the money put speculation is occurring. So rapidly you'll watch this in the morning and then we start dropping to the downside. You see that linear fit line as well as the centroid for the puts rapidly drop to the downside, and you see the targeting there of those lows of strike prices below 62.40. And then obviously we reach a balance point where these put speculators want to be paid. And 50 delta basically is what we discussed. A lot of the out of the money put speculation is 20-30 delta. And then when out of the money put speculators or call speculators reach that 50 delta, they usually try to take profit. So again, you can see that kind of line just continuing to get built on the put centroid, not targeting much lower. So that's why we weren't looking for a significant move back down to the downside. Now, if this put centroid had been a significant negative slope, continuing to target strike prices down below these lows, you see how we actually had 1, 2, 3 lows there and really not much more targeting below those. So that was why we were anticipating not to drop down towards that 6,200. And you see the highs there roughly around 6,250. So again, as we approach those levels, the put speculators were taking overall profits. The main takeaway is this linear fit line. You see it drop very rapidly. Start watching it here. You'll see it drop very rapidly to the downside. So that's increasing that slope of the, decreasing the overall slope of the put centroid, telling us that put speculators were looking for downside. And then the call slope was just rapidly declining. So no out of the money call speculation basically was occurring for the day. And when that happens, obviously price appreciation is going to be very difficult. So you see that linear fit line really just continue to drop to the downside and the call centroid continue to drop, indicating now you'll see a little bit of a rise here. Obviously we making kind of a new highs there, basically just for a few minutes, but then we rapidly drop back to the downside. So if you're looking for a bounce and you got in a long trade, and then you saw this call centroid rise slightly, but then drop back to the downside, you would have quickly exited your overall long trade. So again, this is how we use the intraday volume analysis to keep us on the right side of the trade. Again, if this call centroid had turned back to the upside, then obviously we would look for upside price appreciation, but it was just decisively to the downside all day. So again, that trade was to the downside and not looking for major bounces all day, which pretty much was occurring within our overall membership. And I took a quick short trade in the afternoon. Wasn't really looking to trade, but the risk reward setup on that bounce was too good to pass up. So once we got that bounce back to the upside, I shorted into overhead levels and got a nice quick trade to the downside and took profit very rapidly into the afternoon, which posted in our intraday chat and our voice chat. So heading into this morning, let's go ahead and look at the SPX as well as the SPY. So here we head into the morning, watching that we are, this is obviously the full complex, watching that we're above key levels here at 6240, 6245, that index level. I've already discussed that. You'll notice that gamma obviously increases pretty rapidly if we get below 6240, and if we're below the 0 gex, which is the balance point 6245, we'd be looking for more weakness to the downside towards this low of 6217. And then if we're below that towards 6200, you'll notice that SPY is already above the positive trends level on the full complex, which is a little bit more bullish and above 0 gex. So as long as we stay above these two levels, we'll continue to hold pretty well. Again, QQQs above the 0 and above the P trans. Again, these are key important levels that we need to stay above for the bulls to maintain the overall control and for us to look for more upside. IWM had a decent pullback yesterday. It's been kind of on a rip to the upside. So again, P trans, 0 gex, these are going to be key important levels to the downside to hold. So if there's only a few levels that you watch today, if you aren't a member of Gamma Edge, but I would put these on your chart: 6220 or 620. 621 to the downside. Obviously, we need to stay above those. If you get below those, then we'd be looking for in trans at 617, and you see PGX all the way up there at 630. So not really anticipating that at the moment. And then these levels on Q, pause your player, put those on your charts, and watch those today and see how price acts or reacts around those, and then come back and let us know. And if you want to join us, be happy to come join us at Gamma Edge. Make sure you check us out on X and YouTube. Sign up and subscribe, and you'll be notified when we go live with any of these intraday sessions or what we post for our pre-market prep as well as our post-market analysis. Our Game Edge team, some of our members are traveling this week, so we haven't done the post-market prep, but we like to continue to do the pre-market prep as well as some intraday posts. So anyway, put these on your chart. Again, single stocks, go over these really quickly. You can pause your player and look at these levels, just a few levels: AMD, Microsoft, Hood, Uber, CRWV, just a few levels there. And then Tesla staying above 307, P trans, looking for 320 to the upside on Tesla. Those are key levels there, so make sure you look at those. And then the Mag 7 here, watching these pre-market. They actually are not looking too bad pre-market for many of our levels. Apple, I'll give above P trans. Meta coming into index there, Google above PGX. We see Nvidia obviously above COTMC and PGX, and Tesla, I already went over that, above P trans. So key levels there on the Mag 7 still look to be holding well. So that may be a benefit to the overall SPY and SPX today. So, all right, thanks everybody for joining us. I know this was a little bit longer this morning. I wanted to cover a few other things as well as our intraday volume analysis, how it kept us on the right side of the trade yesterday. And then key levels heading into today, 6260, 6270 to the upside. If we get above that, then possible price appreciation up towards 6280 and then 6300. And then obviously the downside levels we've laid out pretty well too. So, all right, thanks everybody for joining us. Everybody have a great day. We'll see you later.